Hey guys, what's up? It's Chad. Happy Friday. I hope you all have some fantastic plans for this December weekend coming up. Well, wanted to talk to you a little bit about today about institutional position sizing. So, the government actually takes polls of the institutions and their incredibly large positions um, of various things, really, of futures, of stocks, all sorts of stuff. And one of the things they do is bonds. So if you guys have been paying any attention at all, you guys are very aware of this huge fall in bonds. I know we've talked about it before. Um, so right here on your screen, in the upper left-hand corner, I have the TLT, and in the upper right-hand corner, this is the IEF. I don't talk about the IEF as often. This is the 7 to 10-year bond ETF. But it's very important, and you can see that it's been doing the same thing basically as a TLT. And the reason I bring up the IEF is because we can track, institutional holdings in 10-year treasuries. So this is reflective of what's going on in the institutions. And, well, obviously this is reflective of everybody, but I can tell you what's happening in the institutions because it's super interesting. So after the election, we saw that institutions took off about half of their short positions in bonds. So that's why you saw this this movement. Sorry, correction. They took off about half of their long positions. So basically the ratio of their long to short positions got cut in half. That's what I'm trying to say. So it got cut in half, but if you look at the last couple weeks, it's really stabilized quite a bit. So obviously we had a big drop off, everybody's selling, and then it's kind of curving a little bit more. And actually, the low from about, let's see if I can make this bigger for you. So this low right here at the beginning of the month, or the end of last month actually, at 104.31 on the IEF, we're still above that. So really over the last week and a half or so, we've been in this range. We've gone up and kind of come back down. And it looks like if you consider institutional holdings that they believe will pretty much stay in this range. So the short positions have not increased and the long positions have increased. So if anything, they expect maybe a little bit of a bias upward, not heavy like that, but um, you know, maybe some uh, sideways to slightly upwards motion. So that's what we're seeing in the 10-year. And we're also seeing that in the 2-year as well. So as you probably know, the 2 to 10-year is commonly referred to as the yield curve. And if the 10-year yield is going up more than the 2-year, then that's steepening of the curve. So we see that the institutions are expecting both yields in the 10-year and the 2-year to basically stabilize around where they are now, maybe increase a little bit more. Now, if you look at the TLT, which is the long end of the curve, it's the 20-year ETF right here. You can see that it hasn't quite stabilized as much. So we made a new low today. See if I can make this bigger too. So we made a new low today on the TLT. So we surpassed the low that was made, a week and a half ago or so. So the TLT looks like it still wants to maybe go down a little bit lower, although it's just not flattening out as much as the 10-year did. But we'll see. Basically I just wanted to call that to your attention because the institutional investors can really move the markets. So we'll see what happens with that. Okay, so that's the main thing that I wanted to talk to you about. But I also wanted to point out, as I often do, the dollar remains in its uptrend. It looks like it wants to break through here. We got this little channel here, this upgoing channel. So the dollar may end up around 104 next here in the next couple weeks or so. But the other thing I wanted to point out was the oil market. So I love watching the oil market. It's just really interesting to me. And if you look at it, it's really formed over the long run like a pennant, like an upgoing pennant. So we haven't been able to break out over this 5250 area, you know, in a long, long time. So what it looks to me like this 200-day moving average has turned up. Um, this is higher lows. So it looks like we may very well break out above this, maybe even as early as next week. Um, that'll be really interesting, especially the catalyst for this may be the weather for this weekend. If you've looked at the weather coming up, we're in the middle of a really serious cold spell from the north. So, if you live up in Minnesota or Wisconsin or North Dakota, you're really feeling it. It's super cold there. So that may just drive oil prices way up, or at least above the $52 range. So that's probably what I'm looking at. And you can play that in many ways. If you have access to futures trading, you can buy the CL, or you can buy USO, which is US oil. It's a tracking ETF. Any of these will do. So anyway, I hope that helps, and hope y'all stay warm this weekend with that cold front out there. And happy holidays. All right, I'll talk to you next week. Bye-bye.